on TV.
All right, yeah. All right, let's do this. How about we pray real quick?
Yeah. How about we do that?
All right. Lord, we love you. We thank you for this opportunity. We thank you for this group, Father, that we can come together and strategize and think about things. And we just pray for good ideas and your wisdom, Lord, to come forth. We just pray for your help to actually build wealth, Lord, for your kingdom. And we thank you for it. In Jesus' name, amen. All right, so this is not going to be anything crazy fancy. I'm not a professional. I'm not an expert. But this is, I'm just going to share what I do every month. And it works for me. It works for our family. Make money consistently. So, basically, I would start off with who has invested in stocks before AST? Okay. Everybody's dabbled, at least.
A little dabbling.
A little dabbling.
401k stuff.
Okay.
Right.
Sure.
Tesla.
So, Tesla, yeah. Thanks for bringing that up. So basically, stocks are great. They're higher risk, higher reward than like 401ks, mutual funds, index funds, things like that. But they are safer if you do it the way I do it, because I like to be safe. I don't like to take on a ton of risk. So basically, all I'm doing is investing each month. So let's start off with this. We got to start off with this. So I day trade, I swing trade, and I currently am not long-term trading, but I would like to once I get more capital. So does everybody know the difference between those?
No. I don't know swing trade.
Okay, so day trading is you buy something, you sell something the same day. A few minutes later, a few hours later, something like that. Swing trading is where it's been the most profitable for me. Swing trading is you buy something and you can sell it the next day. That counts as a swing trade. The next week, the next month, really anything less than a year. So that gives you time to catch the swings up. Long-term trading or long-term investing really is a year, longer than a year. Generally 3, 5, 10 years, 20 years. Like you hold an Amazon for 20 years, you're doing well, right? So there are some great stocks to long-term trade, or long-term invest, sorry. And that's what I do basically is I take the best companies in the market that you can long-term invest in, and I swing trade them because when they go down, there's so many people interested in these companies and they're the best companies, they go back up rather quickly. When there's a market crash, these babies go up rather quickly and rather large. So that's all I do every month, and I can just kind of show you the strategy here that I use. So you need a chart indicator like this. If you have a Fidelity account, this is Active Trader Pro. It's free. You can download it from Fidelity. I know Webull has their own trading platform. And then there's TradingView, FinViz. Most of the brokerages have a trading platform. They may not all, like Robinhood may not, but you just have to check with them and see if they have a download or even an online presence where you can pull up something called RSI. That's what I use. And a lot of people use it. RSI stands for Relative Strength Index. And it's basically what's the strength of the price of the stock right now. And when I found out about RSI, that really started when I started making decent money every month. Because you're buying. So RSI so this is the 6 month. I use 6 months and max. And slow me down or stop me if I'm saying stuff that doesn't make sense. Stop and ask questions at any time.
Pastor BJ, you said, what was the name of that chart?
This is Fidelity Active Trader Pro.
Okay.
This is actually a download to your computer, and you can open it up, and it's connected to your account, so you can buy and sell right here.
And what did you say those little, you said there was a different type of,
It's called a chart indicator.
Yeah, so this is the stock here. This is the green and red prices going up and down of Amazon for the last 6 months. And this is an indicator, which I'll show you later. You can turn this on and off. You go to indicators and you drop down and there's like 100 of them to choose from. And I choose RSI, Relative Strength Index. This is the only one I'm familiar with other brokerages. You have to like Google search it or something to figure out how to pull it up maybe.
So would it be something like E-Trade would have this type of stuff on there?
Probably so, yeah.
So does Robinhood. Just so you know.
They do?
Yeah,
Good.
Good.
And if you don't have a trading platform, you can Google search RSIs or just look up the company in Yahoo or whatever. You should be able to find the RSI somewhere. So all I do is I use the 6 month and the max is just from when the company started. So it might be 1980 to now. Amazon, we'll pull it up in a minute, probably goes back to early 90s, mid 90s. So on the 6 month, you can see here, it gets down close to this line. This red line is 30. Well, this says 45 here. Okay, I don't know why that is, but it's supposed to be 30, 50, and 70. And so anytime these best stocks in the market get down to near 30 on the 6 month, I start buying some of them. Hold on one second. And then when they get close to 70 up here, this green line, that's when you know it's kind of time to start selling. So go ahead.
Is 30 just like dollars or is that percent?
30 is just like an indicator number telling you that the stock should be bottoming out. It's not 100% accurate, but it gives you, with these great companies, it gives you a sense of, yeah, it should be near the bottom. So it's a safer time to buy. Now you can't just do this with any stock. If it's speculative, a small company that's not very well known, you really just have to use the best companies out there, the best stocks in the market. And even these, you have to kind of know the news a little bit behind them. Make sure there's nothing really bad going on or some serious bad news came out. And you have to also kind of know the condition of the market, is because these crash as well, and the 6 month indicator won't help you much. So 6 month is for some quick profits, some swing trade, maybe a couple. I say like I'll hold some a few days. If they shoot up real fast, I'll sell it in a few days. Sometimes they take weeks or maybe a month or two to get up to where you want to sell. Let me show you the max. So the max. So if you don't have a lot of time to do this, like day trading, you have to be right there at your computer the first couple hours. Most of us have full-time jobs. That's hard to do, right? Or you just don't have time for it. Swing trading, you can do with a full-time job, before and after, lunch, anything like that. The best option, if you don't have a lot of time and you're not really interested in buying and selling every week, every month, things like that, when you put the RSI on the max, so you can see that 1998, this is the max chart of Amazon. When you look at the RSI dipping near 30 here, that's an amazing time to buy on these best companies that I'm going to show you. Now the max you have to wait for a while. So in the meantime, while you're waiting on a market crash or one of these excellent companies to come way down to near 30, you can just be stockpiling money, saving money, because market crashes are excellent time to buy. You probably know that, but a lot of people get scared off and start selling everything. And like I know several people that during the COVID crash, they got out, they sold their stuff and lost a ton of money. And so with market crashes, here in the last 10, 15 years, with more people in the market, more people using just all the new platforms, young people getting in, it's like really grown a lot. When markets crash, they usually reverse pretty quick. So you gotta jump in quicker than you think. So with the COVID crash, it was just getting bad around here, like schools had just started closing. And that's when the market already was starting to go back up. And I'm like, well, I'm not buying here. It's just now getting bad. I'm gonna wait a little while. And it's called a V-shaped recovery. Crashed for 2 weeks and then went to the moon the next year. Oh my goodness, that's crazy. So right here is the COVID crash. You see Amazon went down 100 to 60. So pretty quickly back up. This was the last 2022. So a bunch of the best companies did this, and this wasn't really any like a COVID reason. It was just the markets, like the big dogs understood, the institutions understood that this was like valued way too high. So all of these big growth stock companies, they started just selling off because they like to, the institutions, the big companies out there, they like to sell when things are way overvalued. They'll drive the market down, and then the retail investors like us, the smaller guys, we start selling because the market's going down, and they get to crazy good levels to buy back in. So the biggest thing I wanted to show y'all tonight is if you don't have time to swing trade, if you just want to stockpile money for the next time these big dogs get down to near 30 here on the RSI, it's an amazing time to buy. So this is down near 30, you start buying Amazon or whatever heavily, and then when you're doing this strategy, you don't want to sell in a month or two. You want to let it really run until this max number is back near 70.
Can you explain the 30 and the 70? Isn't it 30 and 70? The 30
Yeah.
and the 70 principle?
Yeah. So I don't know exactly what 30 and 70 mean. It's just a value in the relative strength index that says when that line gets down to near 30, this is it's a better time to buy. It should be bottoming out unless there's really bad news, or unless the overall market conditions is like a COVID crash, or just in a period where everyone's selling these off so that they can buy back in and they go back up. So if you think between, like, this is the max chart, and these different 6 months, there's a lot of ups and downs, but in the max, these are huge swings up and down. And so with the 30, it's just like, even as you can tell, this doesn't come all the way down to 30. So with these guys, Amazons, Teslas, these really great companies, you got to start buying before they get to 30. I should have said that, because most of them will not touch 30. Because they're the big dogs in the market. Everybody wants to get back in them when they're down. So probably 40, I would start buying. And then you don't even have to wait to 70. You definitely can to get out. But if it's 65, you can start selling, make a profit. Sometimes they go much higher. So, yeah. Yes, sir.
I was just curious, the 2020, you mentioned COVID, and then 2022, could that be election cycle?
Yeah, I'm not exactly sure why that did that, but a lot of the growth companies just started getting sold off. Other sectors, they didn't really come down like that, but these big dogs did. So, yeah, I'm not sure exactly why that happened, but.
I was curious.
But if you're watching it, you can take advantage of it.
What 2024 will be.
Yeah.
So why do they call it 30 and 70? What do those numbers, I know 70 is the high side, 30 is the low side, but what's the significance of those numbers? It's just,
I don't know either. It's just the value that relative strength index is, I guess.
Okay.
I'm sure there's technical
Yeah.
explanation for it. But 30 is just the low end of that range, and 70 is the high end. So
I would think it would be on a 100% chart, 100% being the highest it's ever gone, 0 being the lowest it's ever been, and the safe range is to buy between 30 and 70% of.
yeah, it could be, because even though it doesn't say 100, I've seen these go down to like 15. And so not on these, not on the big dogs, but other ones, yeah, they go below 20. They definitely go up. I've seen it up to like 90. So it's a good question.
So which ones are you calling the big dogs?
Okay, yeah. So there's plenty more out there. There's a ton of great companies in the market. These are the ones I normally trade or swing trade. Google, y'all all know Google, great company. Datadog's lesser known, but they're a really great company, and on their charts, I can show you, for Datadog, they go up and down a lot on the 6 month. So those are great for swing trading because they go up and down a lot. Meta, Facebook, Meta's a great profit company, just churning the money in like crazy. Amazon, of course. Palantir, who's heard of Palantir? So, Palantir, if I had a ton of money, I would personally invest in this. It is a little overvalued right now, probably, because it, like AST, it has run up from around $7 to $35 now. But this is a legit company. So, like, all the AI companies started coming out last year saying, hey, we have AI, we use AI. And so they all their stocks exploded. But most of them really don't know how to use AI. They just said they did. And this company actually does. They know what they're doing. They're saving other companies that sign up with them millions of dollars. And Palantir is, these are the tickers for the company's names. Palantir is where the government goes and the military goes for their AI needs. And they're growing like crazy. So if you want to just long-term invest, I think that's a great option for the next 10, 15 years, you know. And they're just really kind of getting started. They were just added to the S&P 500 last week. So everybody's starting to take them seriously now.
Yeah.
That's where government goes for AI.
Yeah. Yeah, government and military.
What platforms are you using to invest in these?
I use Fidelity for everything.
For all of it?
Yeah. I've always liked Fidelity, but there's other great ones. Weeble's good.
I use Google.
Yeah, you like it?
Yeah. I mean, mostly use it on my app. I haven't done a download for my computer,
Okay.
which didn't even know it existed. So
Yeah, that one definitely exists. And you may not need to download to find RSI, I don't know. But it helps.
yeah, I mean, I would on the app version. The only thing that I dislike about the Webull is that they have Webull Pay for crypto, but anything that is kind of like in its beginning stages, like you can't buy XRP on Webull
Yeah.
because it's not.
You can't buy what?
XRP.
Oh, yeah.
So I had to do the uphold. So
Yeah. Fidelity does crypto, but not very many, and they don't do XRP.
Yeah.
They do Bitcoin.
So they'll do it, but it's just not a lot.
Yeah.
That
So I can show you some charts and just show you like some of those on the max. Trying to think, Tesla. You can throw that in there, but it's been kind of flat for the past 3 years. So I do expect one day there will be another huge spike if they can accomplish everything they're trying to do with robo-taxi and everything they got their hands in. They could really fly again.
and they've done 2 splits in the last 2 years.
Yeah.
And so
NVIDIA
yeah.
just did a split. They were a big one I missed. And they're really high now. I think y'all have talked about that some on the text. Any more questions before we keep going? What's up?
So are those numbers at like the 30-70 ratio?
Yeah. So I just kind of check those every couple days and fill those in on my own. So I'll just start with Palantir. So here's the 6 month. I'll just go see what it is currently. And it is 71. And I'll put that in there. And then I'll check the max. And it is 71 also. And I did these before I came, so they're right there. And I just keep track of it every couple days. And they start getting low near 40. I'll start really paying attention and start picking up shares. And unless it's a bad news event, which these companies rarely have, or something like COVID, you can be confident. That's the thing about stocks. Sometimes you're not confident. But with these companies, you can be more confident when it's near 30 that you can buy, and it's not going to go too much lower. It can always go lower, but in a normal market, they shouldn't go too much lower.
So in the Peltier where it's at, you would start selling off right now then, I guess, huh?
Yeah, for swing trading, on the 6 month chart, yeah, and on the max, it's high. I own shares right now. I'm hoping it gets to 40 before it comes back down because it's really popular right now. And because they just had the big news of getting into the S&P 500, then hopefully it gets to 40. I'm gonna probably sell around 38, 40. But yeah, you're right. The numbers are high there.
Do you just remember if the numbers are trending up or down? Or do you take note of, like it's at 39 now, but yesterday it was 37, so now it's taking, like do you just have?
Yeah, I mean, I'm watching it every day,
So
at least half the day anyway. So yeah. Once you check it, if the numbers are getting closer to 40, 30, then yeah, I would like pay more attention, like every day or a couple times a day, and check it and see where it's at. Because when sometimes these can really drop down to 30 and then be back up to like 37 in the same day. Like some days are crazy, way up and down. So yeah, you'll want to check it pretty often once they get down low. I'm trying to think. I mean, I don't want you to be. This is just the list I use and made for y'all, but there's plenty of other companies if you want to research.
So you're not really looking at the value of the stock, whether it's at $35 and then $40. You're really looking at those numbers, and if it gets drops below 40, looking at buying.
Yeah.
And then it gets close to 70, no matter what that value of that stock is, you're selling
Yeah, on the 6 month.
on 6 months.
Yeah, on the max, you want to hold it for longer.
Yeah.
So
So I kind of going where Steve just went. You don't really look at prices so much as you look at this index, which some expert or committee of experts has arrived at. Kind of, you're kind of relying on their strength assessment.
yeah.
And you hardly even, I mean, you look at prices, but you don't make your decision on that.
Well, actually, we can talk about that too. I didn't think about bringing that up, but yeah, that's a good point. Yeah, I do look at prices because there's patterns in the chart.
For me, it also goes into how many shares can I afford to buy.
Yes, that too.
If I can buy only 2 shares of Amazon because it's $600 a share versus, or $300 a share versus if I can take my $600 and buy 100 shares of something, you know, as far as what I can make with it.
So sometimes I do pay attention to the numbers because there's levels that stocks go up to. Like the bigger whole numbers are where stocks bounce off of and come back down, or they bounce and go back up. So like 50, 100, 200, just the big whole numbers. You can see here, where did Amazon stop here? $200. And then bottomed out near 150. So yeah, sometimes I take that into account. Let's just look at AST, I think. On the 6 month. So this one topped out near 38. And look where it came down to 28 and bounced.
Oh, that's one
Huh?
month. That's a month.
This is on the 6 month.
In between each line is a month.
On the 6 month.
No, it's about a day or two. You talk about where
Yeah,
the
this
green
is
and the red
this
is?
is yeah. Each line is
Oh,
a day. on
each
this.
line is a day.
Yeah,
Then each long. Okay. Okay.
because a few days ago we had that huge spike right here.
That was a fun day.
Yeah, I was like, let's go to the 40s. Let's go.
Yeah.
Now, what's the red lines for? Is that just the drop down?
That's when it's dropped.
Yeah,
If you've been swing trading
that day.
AST for the last month, you could have made some money. But
Yeah.
my fear is that I'm gonna buy it down low and then, sell it low or buy it low and then it's gonna.
Yeah. Well, and then there's companies like this that I think most of us are in that we believe in for the long term. So yeah, this is my current long term holding, and that's it. But yeah, so the green on these, the green on the daily lines. So on the 6 month, these are daily lines. Just means that that stock closed up on the day. It might be 1 cent higher than it was when the market opened, but it's up. And the opposite for the red, it closed down. So, yeah. What else?
So I know virtually nothing about this, but I've seen charts of people who subscribe to the technical method that they like have these things. You know what I mean?
Yeah.
It's tracking
Yeah.
ranges, and they say if it breaks that ceiling, this and that's going to happen.
Yeah.
You ever mess with that?
I don't. That gets used a lot in day trading, and I don't even use it for day trading. I kind of use this method and patterns. But yeah, there's like trend lines. As you can kind of draw a line here, and it does the bottom. There's trend lines that people try to get them to bounce off of, either swing trade or day trade. Let's see if I can see some sort of pattern here. I like doing this with day trading or swing trading. You see how this comes up here and then it goes across this line, which is $8. When it does that, it kind of just stays above a certain level. That's called a support area. And if it stays above that level long enough, it should keep rolling.
It looks like it did that several times.
Yeah, so this one did. Support level. 10's always a good support level.
So at some point in time, maybe that $8 was that 70 range, and then it continued to stay there, and it went up.
Yeah.
And moved.
Yeah, and this one's different. This one's a beast. I've probably never seen one do this as far as over 3 months go up that much, and it just kept rolling. Never really pulled back hard. So until now, it finally did, but it's still really elevated.
So do they, with companies like this that are moving up, do those 30 and 70 ranges reset to a broader?
Yeah, generally, like we can see this one is down to 50 now. So it's kind of like, okay, is this still on fire and is it only going to come down to 50? Or is this one actually going to come all the way down to 30? Because if it does, then we can expect maybe $22, $20, maybe lower. So hopefully this company's so on fire right now that it just stays above where it's at.
Why is this your long term? Because it's a newer company and
Just because of everything Bishop and Kevin has said, and finally researching it, that the opportunity is massive. So,
right.
and it is with like Palantir and plenty of other companies, but this one's really massive. So I'm just gonna hold on to it.
When you're looking at support, or you're looking for a certain number of days, I know it probably varies, but you wanna see that, let's say it's $8 in that range. When are you confident that that's actually, in a range where it's in that support phase, whatever you call it?
Good question. Let me pull up something else here.
Please.
No
well,
one's screaming, so.
I'm like, that sounds like a taser. I don't think we own one.
So it could be a while or it could be pretty short.
Okay.
But any time, and this comes from day trading, but it should work here too. Anytime that it finds a good support level 1, 2, 3 times at least, maybe more, but 3 times is usually when it takes off.
Okay.
Makes sense.
Of course here, that was just a nasty day in the market overall, but look how quick it recovered. And Amazon did this and all the other ones.
If you bought right there, you'd be in good shape.
Do you mind if we ask anything about crypto, or is that another night?
That's next month.
Just a
That's not a question for me, really. I mean,
It's just a general question, do some of these rules apply to crypto trends as well, or is that just completely different?
I don't mess with those, but I think it does.
Just kind
I'm sure it does. I know support levels and resistance levels do, and I didn't show you resistance levels, but
I think the big thing is just more volatile.
Yeah, it is.
yeah.
Like you've got your stable coins, which hold their value, and then you've got your junk coins where you can get a ton of them. So I think it's just a completely different terminology, and our strategy is buy XRP and hold. That's hard.
Your strategy is what?
Just hold.
Buy low and sell high.
Yeah.
XRP, XLM, and a couple others.
Yeah.
They're legit.
Alright, so this is Facebook basically. See a good support level here. 150 again. It's the big numbers. 100 here. So resistance is where they kind of top out. It wasn't quite 400, but almost. Trying to find one where there's a resistance and then it broke through, and usually it'll come back down to that resistance level and keep going. So this is another case of if you hold your money for a market crash, Meta at 100 was a screaming buy, and on the max, this one actually got down to low 30. And then look what it's done, 100 to 500.
Did that really surprise you? I mean, in this time when we're listening to non-mainstream news and listening to how Facebook censored, did it take off like that? Doesn't that seem crazy?
I mean, yeah, it does, but they make so much money and they're so profitable. They have their hands in several things that it doesn't matter. The stock's going to go.
So that's who owns Facebook? Meta.
They changed the name.
Yeah, it's still Facebook, but they changed their name to Meta.
And they own WhatsApp.
Yeah, well, they own WhatsApp, they own Instagram.
Threads.
So now they're up near 70. It's like, okay, I probably shouldn't be buying Meta. Even though if you're holding 10, 20 years, they still may be a good buy right here because they're just a great company.
I'll wait till it's $100 mark again.
It may never get there,
They
Dan.
never get there.
May not.
But
I think it's gonna
250,
progress.
maybe, yeah,
I think it's gonna
possible.
progress.
So you guys that have your money in these, like you have yours in Fidelity, in your swing trading.
Yeah.
How often are you have to forgive my ignorance, are you being taxed on those profits that you make, or is it until you pull it out of that you're being taxed?
When you sell, at the end of the year, whatever you sold that year gets taxed.
Okay.
So
Whether I bought it, whether I held on to it for 3 days or
yeah, so
6
that's
months.
good question. So that's the thing with taxes. If you sell it, if you day trade or swing trade and you sell it less than a year, you'll be taxed at your tax bracket, whatever wage tax bracket you're in. So higher than if you hold and sell after a year.
So it's 1 year is the mark.
Yeah. So if you want to save money on taxes, hold for more than a year, and you'll get taxed at, I think it's 10%, the capital gains tax currently. So, yeah.
That brings up an interesting thought. Up until 2 years ago, I was with an investment company and I had stocks in IRAs and such. And it hurts to pay the taxes, but the paperwork is easy because if you're doing through a big company, they send you a thing, you put a code in your tax program and it fills everything out and you're done. If you're doing your own day trading, isn't that a nightmare doing taxes?
I have a guy. I don't mess with that.
But also, like, so we will, like, you can print your statements
Yeah.
on a regular, anytime that you want, or you can go back at the end of the year and you can pull all your statements for every month or every quarter or whatever you want to do.
Yeah.
They typically have a way to keep track of
They keep track of
your
it.
P&L.
Yeah.
I send them my statements and then I have to send them an Excel spreadsheet of all the transactions for the year, which is hundreds. So,
But you're responsible for building that spreadsheet.
no, you can export it.
Fidelity does that for you?
Yeah, you just have to find it and export it. So, yeah, thankfully. That'd be terrible. Yes, sir.
I got a couple questions. One of them is, I know different platforms will have different fees for every time you sell and buy, and then kind of being aware of that for which platform and making sure you're not overfeeing yourself on if you try to do swing or whatever. And then the other question would be is explaining options a little bit.
Options? That's not me. I don't understand them yet. Bishop, maybe, if you want to. Okay.
But he had another question.
Yeah, the fees, you definitely want to know what your fees are, but they're so minute, at least for Fidelity, that I don't worry about them. It's like 1 or 2 or 3 cents, I think, on a transaction. So, yeah, definitely know what it is though, just in case it's pretty high.
So, those 30 to 70 ratio, is that only on computer? Can you find it on your phone as well?
I'm sure you could find it somewhere on your phone. You probably can't do the platform like this on your phone.
Yeah.
I know you can't do Fidelity, but you can Google search like current RSI, our RSI is near 30, and there's web pages that'll show you what's near 30.
Okay.
So
And I don't know, like all the different platforms, I just know I've only used Robinhood on my phone, and there's an RSI on the phone, on the app, and it's super easy to get to. I don't know if it's versatile as the way you use it, because up until this point, I haven't really done my research. I'm not doing swing trading, I'm not doing day trading, so I haven't been, I haven't purchased anything or even suggested anything to you based on a 37 principle that I didn't even know about until you told me about it a month ago, or 3 weeks ago, whenever it was.
yeah.
But I know you can, and you can do all those same things. But as far as options, you guys, options is complicated, but let me explain. Let me just tell you the difference in money that you can make. How many of you guys came into AST around $10, $12? Okay, that's about what it was when I was telling you about it. Okay, so at $26, you've a little bit more than doubled your money. At $24, when the stock went up to $24, you've now doubled your money. But the other day, y'all were tripling your money because it was like $36. Okay, yeah, $36 would be tripling it. All right, and it'll go back up. Y'all, you know, you'll be tripling, quadrupling your money, all that kind of stuff. However, even at this point, when I bought 10 options for $100 each, and it gives me access to 100 shares. Okay, and per option, so it's 1,000. It's 1,000 shares of someone else, and I'll tell you about that. But I just want you all to know, even right now at $26,000, I'm sitting at almost 1,100% profit. So while you may have doubled your money, I'm 11 times over with the option. 11 times. Even at $26,000, I'm 11 times over. And so you want to pay attention to options, because if Kevin Ortiz was here, he would tell you not to buy any stock, buy options.
Yeah.
Because you can make literally 10 times plus what you make when you double. And so this is the way it works. You investigate a company and you think, wow, this company's really going to shoot up. It's a gamble. Options is very risky. It's a gamble. And so you buy an option, and that option has an expiration date. And so you navigate the price, because the longer the option has on the contract, the more time that stock has to grow. And so it's going to cost you more than if you did it, say, in a month. But the profit that you can make, and say, if you buy it in January of 2026, that's when the date. I just bought my mom 7 options, but it doesn't expire until January of 2026. Now I've got my 10 options are expiring January 27th of 2025. I bought 3 AT&T options. I'm buying other companies too in options. And it's basically, you're buying it for 1/10 of the cost approximately that it would cost you to buy actual stock. So, case in point, if the stock's at $10, I bought 100 shares through an option for $1 each, not $10. Now, here's the thing, I don't own those stocks forever. At the point of expiration, I have 2 choices. I have to sell it, or I can buy it. But if I bought the option at $10, okay, and again, it's 100 shares, and that price goes up to $35, I can buy the stock and own it forever at $10. Or I can sell it and make all the profit after the strike price. So in my case, when I bought those 10 shares, I was buying it at $9.85. Okay, the strike price though was $20, meaning if the stock between now and January doesn't go over $20, I make nothing. I make nothing. Now the only money I would lose is my investment. Let's say it went from $10 down to $2. It's not that, if you own stock, then you have to just ride that out. Okay, or sell it on the way down. But with an option, if I put in $1,000, it's not going to make me pay $10,000. The most I could lose is my original investment. But once it goes over $20, I make everything, and I can buy it at $10 and keep it for a long time, or I can say, you know what, I'm going to sell it and make all the profit in between. So let me explain. Someone else owns this stock. Let's say BJ owns this stock, and I say, BJ, I want one option from you. BJ says, I'll sell it to you. This is going to be the strike price, meaning I'll sell it to you for this much money, but in order for you to make any profit whatsoever, it's got to go over this much. And I agree. All right? So I'm going to take a chance because I think that stock's going to go up. I give BJ $100. That's what I paid for it. $100. All right. Now, BJ has agreed that if it goes over $20, he doesn't make any of the profit. It's still his stock. I make all of the profit. Now, if it doesn't go over 20, then BJ keeps all that money, and I lose everything. And it's still his stock. So the guy selling it makes money, but So like when it went over 20, like we're at 26. So I want y'all to understand, it's over 26, but I have 1,000 shares. So it's $6 times, 1,000 is where I'm at right now. And then, but you gotta understand, because that's not the only way you make money with options. Because I have a contract that doesn't expire to January and has the potential to go up, I've made another $6,000 based on that contract's worth. It's worth a whole lot more money than just the options, what the stock is doing by itself. Someone else could say, David could say, right now I'm going to buy that option from you. I sell it to him, and now he has the potential, if that stock's going to shoot up, to make all the extra money. Okay? So right now, the option that I bought for $100 will cost you $1,700.
Wow.
The same option. All right? And so, but that option that you buy at $1,700 right now, give it a year, and it might cost you $3,400 or more. So you're buying, you're coming into agreement for about close to 1/10 of the cost. Maybe it may not be 1/10, but it was when I bought it. To say, I want to come into a contract with you to borrow your shares up until this date. And I'm going to tell you that if it goes over a certain price, I'm going to make all the money on it. But if it doesn't, I'll lose the money I invested. And so it's risky. See, the difference between that and buying stock is stock doesn't, for you to make 10 times, the stock would have to go from $26 to $260.
Yeah, which takes a lot.
Which takes a long time. That's long term. An option is a short term investment that can really pay off, or you might lose everything. So the first time I bought an option was in June, and Kevin said, how much are you willing just to throw away?
Yep.
He said, never buy options like with your nest egg.
Right.
What are you willing to throw away because it's risky? And I said, I don't know, $500? I just threw out a number. He said, okay, let's look. He said, you can buy 5 options. And once I realized what it was, like in one day it shot up, and I bought another 5. Okay, so I spent total $1,050. But that investment right now, just on those alone, is almost $12,000 profit. Does that make sense to everybody?
Yeah.
Did I confuse you, or did I explain it well? I don't know.
But you have to get rid of it before the.
Okay, so the date, you can sell it anytime, but the date of expiration, it has to be sold or purchased. Sold or purchased. If you don't sell it or purchase it, I think you forfeit it, and I think you lose all your money.
Yeah, I think so.
It's actual contract.
Yeah.
Now there's another type of option called a put option. What I just told you is called a call option. A put option is, let's say that stock is at $26, which it is right now, but you think it's fixing to fall to 13, and you have all this stock. You can buy a put option, and what it does is kind of like insurance. And you can say, I'm going to put this, the put is going to be, if it falls from 26 down to 20, you think it's going to fall, you actually make money on the fall. Because even if it falls down to 13, you can still sell it off at 20. Now, I don't know exactly how that works. I've never done a put option. But it's called a call and a put. And the word option means you have an option to buy it or sell it at the original. Buy it at the original price or sell it at the current price. Buy it. Let's say this stock shoots up. See, I got these options at $10, $9.85. Let's say I was hoping it would shoot up today. Let's say it shot up to 80. I would have sold it. I would have sold it like that.
Is it in your portfolio to sell, or is it in the other? Is it not in your portfolio until the strike date? I'm not quite getting that.
No, the strike is not a date. The strike price is where you start making money. My strike price on those is $20. I bought it at 10 with the risk that it had to double in order for me to make any money whatsoever. That's called the strike or the break even.
Does it really go into your portfolio? At one point you used the term borrow. A call is you're borrowing stock in a contractual arrangement from the brokerage, I guess.
From another person, it's person to person. Now you do it through like your like Robinhood or whatever platform you use. You never meet this person, you never talk to them. But let's say I owned 20,000 shares, but I'm like, I'm gonna make some money on this because I don't think this stock's gonna do a whole lot. So I agree, hey, that people can buy up to 5,000 shares, give me options on 5,000 of my shares. So I know I'm gonna make this money no matter what on it. So people there, I don't know the strategy of you personally selling an option. I've never done that, but people do it all the time. I come in, you're willing to give 5,000 shares, and I say, hey, I want 100 of them. Okay, I enter into a contract with you that if this goes up to a certain amount, I make all the extra money, or I can buy it at the original price with you, no matter what you're making the current amount of money as the one selling the option. You're going to make money. If it falls below, you keep all my money and you keep the stock.
But it sounds like it goes into your portfolio once you reach that maturity date and you buy or you sell.
It's actually immediately. Like let me. Well, I can't show you up there, but like it tracks constantly every single day how much you're up and how much you're down. So there's a term. Once it goes over 20, in my case, then I'm in what they call money. I'm in the money. Okay, but I started making money immediately, and I didn't understand. The reason why I did is because what the contract was worth. The contract itself, with the potential that it has, is also monetary valuable. That has nothing to do with the stock. Okay, so every time it goes up $1, you guys make $1. This makes like $10. Does that make sense?
Yeah.
But the reason why it does is because it's judging, maybe not $10, but $3 or $4, $5. It's judging what the stock is doing versus what that contract is worth. And so you're making money from different angles on it. It's different angles. It's not just about the stock. It's about the contract and what that contract's worth and what someone's willing to pay for it. See, right now, the contract that cost me $100, people are willing to pay $1,700 for that same contract. So the contract itself is valuable because AST is doing well. The contract and the stock. And it's 1/10 of the price, approximately, to buy an option of actual buying stock. So at the time, I have 1,000 shares of AST stock in 10 options. Okay, $100 shares per option. I spent $1,000. If I had bought 1,000 shares of stock, it would have cost me $10,000. But then you own them forever. Like I could ride that stock for 20 years if I wanted to. So Kevin, when he bought stock with Apple in 1998, he put $10,000 down, and it was about $10 a share. He bought 1,000 shares, and it tripled in price to $30. And he's like, man, I made 20 grand, and he sold it. He was so happy until it kept shooting up. If he had not sold that contract and still had it, it would be worth $57 million. $57 million.
Was that an options thing or just a stock?
No, that was just stock. That was not options. That was just stock.
So
It's split. It is split so many times. Their stock has. He showed me like how many times it split. I forget how many times, but it's like 1,000 times or something. It has split so many times since 1998. You know, and I may be wrong on that, but it's been a lot. And when you fact, I don't know, it's 50. So if I was to say, all right, so I have bought stock in AST too, okay, and I don't know how much I have, but if I say I'm just going to keep that for the next 20 years, that's going to be my nest egg, or you know whatever, and it does what we think it's going to do, it will probably worth millions, maybe not 57 million. I don't have 1,000 shares, but it will be worth millions. And it's a good retirement program unless AST crashes, unless something goes wrong, you know, it could happen. That's why the Great Depression happened, was the stock market crashed. And all these people had everything in it because the idea was put everything you have in the stock market because it can't fail. But yes, it can. It can fail. It's risky, you know. But options are very risky. They are, but this is why you do the research of the company and you have to decide, do you believe that company is going to go up? And is that amount worth it to you? You have to do all the education on it. It's a different strategy because you have to
with options, you have to look at the company, you need to look at the CEO, you need to look at the founder, you need to look at the technology, you need to look at everything to decide about options. This is why I'm always sending y'all stuff. You know, if you're on that chat group, you get stuff from me all the time, and I don't even send you a quarter of what I find that's interesting, because I don't want to bore y'all with it, because nobody really responds to it. Nobody's like, wow.
Read it.
Yeah, everybody kind of glances at it, so I assume they're not interested.
No,
You
I'm
don't
talking
actually need this to understand that.
Yeah.
You only do
So-
options on companies that are low and are gonna shoot up,
Especially
like that are
options.
beginning, that are gonna shoot up, or do you do options on?
You can do options literally. Let's say the stock. Let's say you bought an option, and right now each share is $160. So Tesla. I don't know what's at right now. I lost a lot of money on Tesla because Tesla was at 239. Everybody said it's going to go up, and it went down to 160. So I lost a lot of money on Tesla. But anyways, what is Tesla right now?
228.
Okay, so it's come back up, but still not where it was when I bought it. Okay, so 228. I'm buying options, and the share is 228. And let's say I buy, that's going to be real expensive, but I buy, one option, and which would probably be around, what's a tenth of 228? $28 for one option. It's probably gonna be more like $50 because it's not an exact science. They price it based on value. They don't do like 1/10. Let's say it's $50 for that option. All right, but it's 100 shares. So if Tesla goes up from 228 to 238, which could easily happen, you made $10 per share, which means you made $1,000. You understand? You have 100 shares, and if the stock Tesla, it's a good idea to buy companies like this because for them to move up from 228 to 238, it's nothing. It's nothing. For AST to move up $10, that's 25%, maybe 30%. It's a big deal right now. So on a big company, if all of it moves, let's say it moves up $20 from 228 to 248, you make $2,000 on one option.
Well, do you know what that is?
And you can sell it like that, depending on the call, the strike price.
That's what I was saying. You know what the strike price is when you buy?
No. So what you do is you go in to, I don't know how to do it on any other platform because I've never done anything but Robinhood, but where you go into Robinhood, and it's probably similar, where it says buy, you go into that specific stock and say buy, you hit buy, and it'll tell you like buy, sell, and at the top it says options. You go into options, and then you look at the dates. The dates are at the top. And so you say, hey, I want to buy an option, and it'll give you dates, say November 15th. And then you look at the prices, and some of them are going to say, I don't know, $30 or whatever. They're going to be different price. And what it is, it's people trying to sell to you. And then if you go in there, I can show you how to do it. There's actual, like this kind of stuff. It looks different. It's like boxes that will tell you, is this a good buy or not? And then it'll tell you at the bottom, predicted amount of profit. So there's all kinds of technical stuff that coach you. It's not just your guess. And
so you're kind of going in there and dealing with individual people who are negotiating.
Yes,
You're negotiating
sure.
that options contract.
Now some of these individual people, I don't know enough about it. Maybe companies and maybe professional people out
Probably,
there
yeah.
that really know what they're doing. I know that. What's the big three family? A brick or the rich families.
Rockefeller.
Rothschild.
Oprah.
Morgan.
Yeah, all those are big.
Chase,
There's another one.
Chase
It's not a family. Huh?
BlackRock.
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 BlackRock is a big one. BlackRock, like 4 weeks ago, they just bought $3.8 million worth of shares in AST because they think AST is going to make them a lot of money. You know, and I'm like, you know why I know that? I tell you one great way to learn. Twitter.
Yeah.
Twitter. I'm telling you. Now, I also follow quite a few people on TikTok. But something I've learned about TikTok is there's people out there that are lying. They lie because they're influencers. They're talking to 100,000 people and they're like, go buy this stock. And they actually manipulate the stock.
Yeah.
They're not being truthful.
Yeah.
And I've seen that a few times because I went and I bought all this stock because like this is the best buy. This is going to happen. You know, I know this guy and I followed him and he bought all this. And what happened was everybody went and bought that stock and the dude sold and retired.
Yeah.
Right.
He drove it up and he sold it all, like half the company, and retired with like $1 billion or something. It was nuts what he made off of that.
There's manipulation for sure.
Because he was using TikTok influencers.
Isn't that illegal?
It seems like that would be illegal, but that's what they did.
Yeah.
And then it crashed once everybody found out what happened, because when you sell half the company,
Right.
that stock is going to go from here down to nothing.
Yeah.
Right? And that's what happened. Everybody lost, but it's got to be illegal. I don't know.
That's why they say, I'm not a financial advisor.
But
Sneaky.
Who knows?
this kind of stuff, don't ask me any of it. Ask BJ. I'm just, all I know is what I'm telling you. And I am not an expert. I do read a lot. It is something that's fascinating to me because I never considered that your money could be making money.
Right.
I just never, my dad was not a finance guy. And so, but I'm teaching my kids, right now Caleb and Nathan are watching the stock market. They have money in it. And like Hayden here. And so if you grow up in it and you just keep learning, you'll probably make a ton of money on it.
Mm-hmm.
But people who don't have people to teach them, they just keep working for the man the rest of their life. You know?
Exactly.
And they trust the advisors that they're making their best choices with their 401ks and all that.
But their advisors are low risk.
Right.
And what they get paid is not to lose you any money.
Right.
So they're not going to invest in AST.
Right.
Because AST is volatile.
Yeah.
They're going to find like for example, in the stock market, over the next 10 years, with your savings, if you make 3%, that's really good.
That's really good.
But I made over 1,000%. And so basically I was talking to Kevin, he goes, bro, you've made more than people make in like 20 years already when they go the safe route.
Right.
But the safe route does mean you will make money mostly. This instability, this is high risk.
Yeah.
And I've told you that from the beginning. It's high risk. And we know that because it went down it was almost at $40 and it's down at 26 right now. But let me just tell you this, if you follow that line, what's that line? There's different lines. Like for example, let me show you. I don't know what it's called, y'all. I have it on my phone. But there would be a line on here
Like a trend line?
yeah, trend line. And it would do this and it would start doing this and it would hit here going up.
Mm-hmm.
Now, I've been following it. If AST goes down to $22, it says 26, and is still on a super healthy, even if it goes down to 22, it's still above the line. Like it's still on its path because I feel an obligation to you that if it's time to sell and I'm selling, I need to let y'all know. Now what you have to do is you have to manage your stock with your own responsibility, not with me.
Yeah.
I mean, that would be terrible if all the pressure was on me and I'm a beginner.
Come on, Bishop.
You know?
Let's do it.
But
Where's my money?
all this, like it's worth you doing the research. And when BJ started telling me about this, I've been following it ever since. Just looking at it, because I'm like, oh my gosh, I had no idea that 30 and 70 principle. Do you know where it's at right now? It's like, I don't know, where's it at right now?
Earlier, is that 50?
Yeah, it's like around 50, right? 50, 60, something like that. Even at $26, it's still not time to sell.
Yeah.
It's not time to sell, I mean,
What would be
What's
time
that?
to buy? At 22, you said?
I can't read this one.
You talking about AST?
Yeah, where's it at between 30 and 70?
Oh,
It's showing you 50 right there.
yeah, I don't know why these are doing that, but.
Your green line
That's
70.
30%.
Okay, yeah,
Red line
okay.
30.
Yeah, so it's right here, so it's saying, it's not really the best time to sell, it's not the best time to buy, it's hold.
Right.
But all these financial advisors that I follow are all saying 100% across the board, buy,
Right.
buy AST, buy AST. Everybody is in agreement, buy AST, at least that I follow. Because sometimes like these lines don't, like when it shoots up to like up here, from here, man, you're probably way over 100%.
So
on
the
that.
30/70 is probably good for your stable stocks.
Yes.
Where you got, okay, these
What-
are gonna,
what
like
show the
your
companies you were
Metas,
showing.
your,
Yeah.
you know, those type. But with something like this, it probably, that rule kind of goes out the water, because you're like, well, yeah, it's in the 50 range, but if the price is 26 and you're expecting it to be 50, then that just, it's only going by historical, not future potential.
Right. So I'm learning as I go. So AST for a little while, I don't know where at, somewhere in here, was going up and going down like every day. It was going up and going down, and so what I was doing was I was selling high and went down. I bought again. I was selling and buying, you know, and then I realized I'm gonna be taxed. And so I was probably losing money, but I didn't know what I was doing. Somewhere, it might have been a year. Anyways, because I'm like, I don't know what I'm doing here. And then all of a sudden, one day, it went up to a certain price, like it went up like $2. I'm like, oh my goodness, I sold. I was so excited, but that day it shot up like $10.
Oh.
And it never come down, it's never come down. And so I don't know what it was, but I lost a lot of money that day. It was like, gosh. So I made a lot of money. It's like, I don't know, guys.
So yeah, with RSI 3070 and trend lines, if they stay above those major trend lines, that really helps you know where to add to your position or buy. So
BJ, I had a question. What does it mean for a stock to split?
okay, so like Nvidia last year ran from 100. I'll show you. Before I do this, I fully agree with Bishop on the options. You can make a ton more money. The reason I don't do it yet is because I don't fully understand it. I'm watching YouTube videos, which there's a ton out there to help you learn. I'm trying to learn and understand so that I get them right and I don't lose that investment. But I need to learn it quickly because it is a great option to, no pun intended, to make a lot of money. This, you can make a lot of money, but you kind of need a lot more capital to put in just regular stocks and usually more time for them to really roll. A stock split, so Nvidia ran from $100 to $1,100, or no, $1,400.
That's unreal.
Yeah, in a year and a half. And funny story, I bought it at 140 and I sold it at 160.
Oh man!
Yeah, this guy.
Made money.
I did.
Hey, when you sold it, was it at 70 on that chart at the time?
Probably.
Okay.
Well, because it went up that much in a day, it went up that much in one day, so I sold it. And I was like, I'll get back in. I never got back in for some reason. I don't know why.
So
So
I'm following the 140, 160.
So it went from $100 to $1,400. So the stock split happened a few months ago, I think. And now instead of 100 and 1,400, you see 10 and 140. So they did a 10-to-1 stock split, which means the $100 share price before is now $10.
So the put works the same way.
I don't know all the reasons they do that, but when they do that, they make it more affordable for retail investors.
Yeah.
So, like, it's now $119 instead of $1,100 per share.
So
But the
if I
people
own-
that,
I'm sorry, go ahead.
but this is like the one thing that I know. But then the people that had it at the 1,400, they still kept, instead of having one stock, now they have 10 stocks.
They have more shares.
When it
Yeah.
splits
Okay,
the
so
So
share.
you won't
they're
lose
just
your
bringing the
value.
price down by increasing the supply.
Your number.
Yeah, I think so.
Yeah.
And then you now have more shares, so you multiply your, as it continues growing.
I think it benefits everybody. Once it gets too big, they
Keep
keep
your
us
same dollar amount, but now you have multiple.
That happens pretty
shares.
often. Does they do that?
Yeah, like Apple's done several because of how massive they are. I think Amazon's done several.
Way for them to generate wealth.
Was that?
The companies, whenever they
Yeah.
split their stock,
Yeah, that too.
they generate wealth because now more people can buy.
Yeah.
Not everybody can buy a $4,000 share or $1,500 share. they can buy $150.
Like there's companies out there that it's $4,000 for one share. They haven't done a split or whatever. And it's like massive.
So potentially, Steve would do that as a growth potentially.
Yeah, if they get big enough, I'm sure they will. The only other thing I wanted to say was you have.
Because I was gonna put these by the diaper bag to bring in the car.
The only other thing I wanted to say is there could be a lot of regrets, like with missing out on stocks. You just have to know that this is part of the game. If you sell too early and it goes massive, it's okay.
You made money.
You made a good decision. So you made money. So on these 30 and 70s, if it goes down under 30, let me show you something real quick.
Anybody can do it. So as an option, you're hoping that they would squeeze the stock so you can make the money.
Yeah, that's it.
Yes, that would be amazing.
What it is people like, okay, we're gonna get all these big companies and we're all gonna buy a bunch of stock, and the stock shoots up, and then they go, now sell, en masse, and that's called squeezing the stock. And so all the people that are spending all this money on puts, they lose everything.
So you have to be willing to, even on the 30 and 70, if the market changes and you're swing trading Amazon and it's down to 30, but it keeps going down, you have to be able to say, okay, I'm only willing to lose this much and sell. You go ahead and get out and wait for a better opportunity. Because the 30 and 70 doesn't always work, it just helps. It really helps. So
I know how it messes with your emotions, because I bought $8,000 worth of XRP at one time. And it went way up to where it was worth $40,000.
wow.
And I was thinking, okay, man, now my 8,000 is turning to 40,000. I'm gonna keep holding on because it's gonna be millions, And then it just started dropping. And I finally sold just to recover what I put in. I was like, but the emotional side of it, I didn't realize. Like, oh, it's at 40,000. I'm looking for millions, You're like, and so it's like the emotions start.
You picked out your Lambo color, didn't you?
Exactly.
And that's the thing with investing. That's the game.
Know thyself.
Hold it, fold it.
Hey, BJ, Rocky had a question about interest rate, like actual interest rates and how they affect the stock market. You understand that? Because they're talking about this next round when they do the quarterly, that they're talking about dropping interest rates.
Yeah.
Maybe 2 times before November.
I'm not exactly sure how that affects the market. I know when the government does stuff like that it can cause dips, or depends on what they do, up and down. I'm not sure exactly how interest rates affect
It
it.
means inflation goes up, so I know it affects silver and precious metals a lot.
Yeah,
That's why it's supposed to double by the end of the year.
yeah.
Or one of those, but you don't know how it affects
So
stocks.
commodities are different than stocks, right? They value differently, right? They hold.
Yeah, I don't do gold and silver currently, so I'm not sure how they move, but they're different, I'm sure. With investing, you got to be able to sleep at night. Don't put something in that you're going to be like laying there, oh my gosh. You don't need the stress on your life. Just whatever you're willing to lose, invest with. Oh, and this is good for everybody, but for Hagen,
What's up?
hey, real quick, brother, if you stay out of consumer debt, like credit cards and stuff, you'll have more money to invest. You stay out of debt, yeah.
Dave Ramsey's of course right now in school, so he's talking a bunch about staying out of debt.
In school? Cool.
Yeah, at the high school.
That's
Isn't
great.
that wild? Dave Ramsey in the high school.
Yeah.
Yeah.
That's-
I agree with everything he says, except for
ISD.
he's very safe in the market. He does mutual funds. So,
Yeah, he's
Yeah.
been talking
So,
about
does anybody have advice on if you have cash laying around, what you would put it in?
You can give it to me.
Invest in the Fraley
He
family.
asked if you had cash laying around, what do you do with it? And I said, give it to me. So,
well,
I mean,
this
Well,
is the,
I mean, I've heard Dave Ramsey talk about finding a good, safe mutual fund where the risk is not too high, where at least you're building something there if you don't want to put it in high risk. So.
yeah. And for most Americans, they're working, they're doing family stuff. They don't have time for stocks, or to manage it themselves. So put it in a mutual fund, 401k, slowly grow it. Yeah, that's a fun way. What's up?
Can you tell me the difference between a 401k and a mutual fund?
401k is like usually a company directed, the company you work for. Say you work for ConocoPhillips, they give you an option to put money in every month from your paycheck. And good companies will usually have a match. Like you put 300 a paycheck in, they'll match that 300 or whatever their match is. So, yeah, there's a lot of debate on are 401ks good or not because you can make more outside of them, but.
And I was also going to ask you, like, should I talk to like a financial advisor on what mutual fund to invest in?
I don't think so. You can if you really want to, but.
But how do you know which one's good to put into?
Dave Ramsey teaches how to find them, for one thing. And like all these brokerage accounts, you can buy them in there too. You can pull them up and you can look at, like, sort their performance over the past 10, 20 years.
I've seen baskets on Fidelity.
Yeah.
Have you ever messed with those?
I think it's kind of the same thing, like a basket of stocks, like a AI basket, or yeah. So, good questions.
Wanted to bring up one other big kind of elephant in the room. We've talked about big dogs as being good stocks, and we mentioned a little bit about big players like BlackRock doing bad stuff. You know, they can squeeze, manipulate. So how do you, I mean, when you're in the midst of all this, what do you think about the future if right now, I mean, I've been hearing for 2 years that the market is way overinflated and people like BlackRock and the liberal establishment is falsely propping it up, especially in an election year, so that they can't say it went down on our watch, and that there's mumbo jumbo going on, and the dollar's under threat, and there's rumors of a crashing economy. Do you kind of hope that whatever emerges from the crash will still recognize the balances we have in various things, which is the optimistic point of view? Or how do you feel? I mean, do you think things are fair, or do you think BlackRock and other bad actors are manipulating things?
There's definitely manipulation from those large companies. Basically, I just stick to the charts and news, like really bad news. I don't mess with that company. If we look at, like, this is a NASDAQ, so this is a bunch of companies combined in this index. So we can see massive gains there after COVID, and comes back down to 10,000. That's beautiful. Like, I should have known that's the bottom, 10,000. And then way up, we're at 17, 18. It's an election year, so that throws a wrinkle in it, but I'm thinking maybe this goes 10 to 20, and then maybe we get another big downward move to 15 or something. So I'm just looking at charts mainly. As far as massive dumps in the market, and then all we have is the history of the market. And every time it dumps, no matter how bad it gets, the market crash in 1930, the market always comes back. So unless it's end of the world stuff, which this wouldn't matter anyway, rapture, this wouldn't matter anyway. No matter how bad it gets, this always bounces back. We have over 100 years record of it bouncing back. Crypto, I don't know. Certain ones will probably stay around, but Bitcoin, probably, I don't know. But the market, it bounces back.
Well, we haven't mentioned precious metals here yet, but I really had nothing to do with crypto until a couple months ago, and nothing to do with precious metals until maybe a year or two ago. But what do you think about gold rising and the fact that if there is a crash, that's what's going to help us? I believe we're going to do a big bounce down, and we're going to bounce up.
Yeah.
and the precious metals will help us bounce back up.
Yeah, based off of this, I think at some point soon, maybe next year, we'll come back down a good bit. I don't follow precious metals, so if anyone else wants to chime in, but that's very possible. It could be part of the way to continue wealth. Yeah.
They feel good to me. They feel they're more out of the influence of the BlackRocks of the world. They're just what they are.
Yeah, that's true. And another thing is the Lord helps us with this stuff. I mean, He's for us, building wealth. He's with us.
Right.
Like, I had an unction of the Holy Spirit, I believe, for Bitcoin, and I just never got around to it. I tried. I kept trying to do it at work because my job had to approve me purchasing however many thousands of dollars of Bitcoin because I was going to go big on it when it was at $2,500.
Wow.
But you had to fill out all this paperwork, and every time I started it, someone would come in with a request, and I just never got to it. But I believe that was from the Lord, and I never pulled the trigger. So, yeah. But if we're submitting all this, our wealth to God, and He's helping us, I believe He'll help us make decisions in the market, or with gold, or whatever.
Yeah, I do too.
So.
Yeah, I think there are several ways of that happening.
Yeah.
Not just one way.
Several ways.
Diversification.
Absolutely.
But I think, today, or yesterday, the dollar came out where it's number 10 in the worldwide in strength.
Yeah.
Behind most of the Arab nations. I forget who all they are. But,
Do you know where it had been?
Well, it used to be way up in the top 5, but
in the top 3, yeah.
Yeah.
But I'm thankful that I'm in a group of men and women that actually want to come together and talk about it, educate. Thank y'all. Thank you, Bishop, for putting this together.
Yes, we should have done this years ago.
I'm
Thank you.
very, very grateful.
I think collectively we'll end up making money together.
Yeah.
Amen.
I appreciate it. Thank you.
Not for everyone, but it is for big numbers.
Right.
And if the market crashes, I'll be texting y'all. I'll let you.
Yeah.
I'll let you know.
Send out.
On the way down.
On the way
Have your
down.
money ready, baby.
Yeah, 'cause it can turn around quick.
He's offering an option on it.
Clyde and Stephanie, thank y'all for being here.
Thank you so much.
Absolutely.
Thank you, Pastor BJ.
Like I
Yeah,
said earlier,
absolutely.
I'm just trying to give you
We can do this again.
of future millionaires, so you guys will take care
I
of
hope y'all got something out of it.
Absolutely.
I was stunned when I realized that these charts stop at whole numbers and come back down to whole numbers.
No,
And,
you're not gonna write
man,
it.
that's amazing.
So how do you divide your time then? Do you have a job and do this part-time?
I have a full-time job. Thankfully, it's remote, so I can sit here and work, but I have my charts right here. So I just glance over, make sure and then when there's an opportunity with day trading or swing trading, I'll move over here for a few minutes and then come back.
I used to kind of do that. I work at home, do technical writing for HP, and I work a little bit, and then I go over to the couch and nap a little bit.
There you go. That's a good investment. Napping.
Before in the office, actually, we have two golden deals. Yes, sir. Yeah. Kind of remember that. Yes, sir. What me? DJ, appreciate all the information. Good. Worship your name, worship your name.